to think about things like, what is your story? Like, what is your historical story? Why is it promising, and why is there a future? And what sort of vision do you have for the business? And how does finding a particular partner, capital partner, or strategic partner, or both, really fit with that? And then also, how does that relate to your goals of, deal goals, life goals, that kind of thing? I think being ready, thinking about that, having prepared the business, which we've talked about in previous podcasts in this masterclass for that inevitable process, is really what month zero is all about. Hello, and welcome to this week's Shoot the Moon podcast, broadcasting live and direct from Revenue Rocket World Headquarters in Bloomington, Minnesota. If you tune into this masterclass or our podcast in general, you know that Revenue Rocket is the world's premier M&A advisor to tech-enabled services company. With my partners today, I'm happy to bring Ryan and Matt into the podcast. Welcome, guys.
Hey, Mike. I'll tell you, I've actually started to get a couple of positive feedbacks from people who've been tuning in to the masterclass. So excited to keep it going. Way to go, Ryan. Let's go.
Yeah, well, thanks. In the past year, we covered just the decision to sell, preparing your house and getting it in order, understanding what evaluation means, what to take home for fees. And then our last one, we're talking about building an advisory team. And once you have kind of an idea of what ready looks like and what your firm is worth, and you've picked an advisor, and hopefully one of those is an M&A advisor, it starts to be like, what's it like when rubber hits the road and we're actually going to get out and get a firm to market? And so today I want to talk about what we looked at is the first 30 days of a sell side process. So you're looking to sell and you've engaged a firm to do so. So Mike, I'd love to know this, just if you can get us going to level set. When we say kind of month zero or just day one in a sell side process, what does that actually mean, and why does it matter so much? Get us going here.
What is month zero? Month zero is sort of the pre-market phase, right? The foundation for everything that follows. And so when you think about, level setting that, there's quite a bit of sort of thinking that has to go on and rumination on behalf of the seller, right? Of the owner or owners in a business, to be processing and being ready, to think about things like, what is your story? Like, what is your historical story? Why is it promising, and why is there a future? And what sort of vision do you have for the business? And how does finding a particular partner, capital partner, or strategic partner, or both, really fit with that? And then also, how does that relate to your goals of, deal goals, life goals, that kind of thing? I think being ready, thinking about that, having prepared the business, which we've talked about in previous podcasts in this masterclass for that inevitable process, is really what month zero is all about.
So for that building phase, and we've understood, and I think a lot of this goes back to what do I want to do next? It's really formulating where you're at and where you're going, and finally getting prepped, and even going through that advisor process. And then Matt, once a CEO says go, and we're into that, from month zero into day one and month one, what should they expect? What should they actually feel like? Tell me a little bit about time commitments and attitude kind of going into this day one.
Yeah. Well, it's kind of all about transferring, right? So we, as the advisor that you've hired, I think you may or may not hear this term that we're going to package, right? We're going to package this firm for market. And it's a term that's used a lot. I don't know if I really like it or not, but you may hear it. And so it's really readying all of the materials that are going to be used in the process of marketing and selling the firm. And so there can be a bit that goes into it, right? If you think about, you've got to get all of your data together, make sure that all of the financial data is ready. You've got to be able to sort of transfer the knowledge, both here's just the facts, but then the nuances of the business, being able to tell the story of the history and the growth of the business, talking about the team, talking about, where you win over competition and why your service and or product and the combination thereof is differentiated in the marketplace. And, depending upon the size of your firm and the team that you have behind you, it may be a lot on the owner in a founder-led business. It could be distributed amongst the team, but there is a bit of a time commitment up front, right? We talked last week about the benefit of having a relationship with an advisor, well before going to market. And, one of those benefits is the advisor can kind of tell you ahead of time, here's the things that are going to be most important. And so in that case, some of those materials and some of that knowledge would have been built over time. In the case that, you really don't have any experience and you haven't been working with an advisor, that first month can be more time intensive, right? And so it's really about all of the data, the financial data, the sales related data, the customer related data, and then the storytelling, right? And some of that can come through marketing materials and the website, but then, there's more certainly behind that. So that first 30 days is more time intensive. Now, shameless plug for us. We've created a fair amount of automation in that process that reduces the time commitment. And so when evaluating an advisor, it's something to ask about, right? But no, certainly in that first 30 days to launch, right? It's going to certainly be more intensive, and really kind of the mindset going in for a CEO and a management team is, how do I enable an advisor or an investment banker to speak as though they were one of us, right? And so the more that I'm able to transfer that knowledge, and, a good credible advisor is going to be able to pick that up pretty darn quickly, especially an advisor that is specialized in their space.
Well said. And then, Mike, I'll ask a quick question and I'll come back with you with another one. But when you're thinking about this first 30 days, who's typically involved, and kind of what level of expectation do you think should be involved in this process?
Well, certainly it's important to have the founder, CEO, leader of the business, owner, if they're the same people, shareholders involved. Those may be different people that play roles. They may be the same people, right? Just depends on your business. And I think certainly you'll need a finance resource, whether that's someone from outside who's been working with you. Sometimes firms have contract CFOs, so I would leave it at your financial strategy leadership. Most likely will need to be engaged at this time, because the intake certainly involves a lot of financial data, but it also, aligns to a lot of strategy, history, vision, thoughts about buyers, what you're willing to accept. And I suspect, Ryan, that's where you're going with your next question.
Well, it's exactly right. It's a bit of what a CEO should expect, but also when you're in this process, it can feel a little bit lonely. And I just wanted to explore that, why a founder here can feel a bit alone, and who else is kind of not in this process.
Yeah, interesting question. I think, first of all, I think if you have a partner, you should be talking to them about what's going on. I mean, this is going to be a pretty material decision for you. For most owners, it's the single largest asset in their portfolio. And, with their partner in life, and their partner in their business, I would say don't discriminate, certainly. You're going to want to involve those partners, whether they be your business partners and or your life partner, in the conversation, because it is sort of urgent territory in many ways, and it can be filled with emotion. And, you may need to be able to have a sounding board when you're like, getting through this process. It's part of what a good M&A advisor does to help you. I think there's much, in some ways, not only a sounding board, but an advisor, provide counsel, and in some ways a bit of a therapist to help you through the tough times. I mean, it becomes an emotional journey sometimes when you're going to be, transacting a deal like this. And certainly there'll be plenty of people that look at your business throughout this journey and will want to poke some holes in it. And you're going to want to surround yourself with, I think, a good team, including your business and life partners, just to be able to talk through the emotions when those occur.
And this is one of those things, we get this question a lot, but oftentimes you may have to, you want to keep that circle tight of the people that you're talking to. And there's many reasons why, but the biggest is there can be data leakage throughout. If the company's for sale, employees, partners, customers, they can all have different reaction to that. They're not necessarily reaction. And so keeping that story is tight. Now, what happens as a CEO, that means you may be asking a marketing department about, hey, can I get all the campaigns for last year? Or if a sales department, I need an update on the pipeline. And it can be a little bit of a tricky time to collect some of that data without releasing, hey, the company is for sale. And so it's something to be cognizant about when you're thinking about these requests, even having requests over time, make that look a little different for the team if you're trying to keep some of that information proprietary to what you're dealing with. So Matt, if we think about the information requests and even how that information comes through, can you talk to me about just more specifically what kind of information is going to be gathered? And you talked a little bit about it, but just one more level of that onion would be great to hear about.
Yeah, absolutely. So let's think about kind of maybe most important is that financial data, right? Baseline P&Ls, balance sheets. Be prepared to go back 5 years. Not saying that 5 years of data is always going to be used, but it may be, right? And going from sort of the base financial data, obviously that's going to tell a story about your history around AR, accounts receivable. Obviously, consistency in account payables, key vendors, right? Is what that's going to sort of lead to. Obviously, being able to demonstrate, strategic debt that's on the balance sheet and being able to communicate that, all of that is sort of encapsulated in that core financial data. I think from there, customer data. Obviously, there's a tie into your financial data there as well. But that next level of customer data that is demonstrating, overall growth within a customer, the historical servicing of a customer that demonstrates year over year, relationship with those customers, the mix of products and services, within customers. And that obviously is going to then lead towards the actual contractual data within the customers. And, right out of the gate, contractual data, not as important, but over time, obviously that is going to be important. So we're kind of going through the fulsome list. Any operational data, right? That is going to be important in demonstrating the management of the business. That then leads into employee data, right? And, can start certainly with your general census, and employee roster and organizational chart and going from there. But then, leading from there, any succession planning that has been done, et cetera, et cetera. And then, I think kind of moving into the future, right? What does forecasting look like? What is that forecast based upon, which then kind of gets back into sales and marketing and go-to-market information and as represented, through the pipeline. And being able to demonstrate how historical pipeline can, has resulted in the actuals, giving confidence to future forecast and future pipeline. And then maybe not quite as much data, but material. And we touched on it in terms of, all of the go-to-market, materials. Including, if you've got a history of refreshing your strategic plan and being able to demonstrate how that strategic plan moves into execution, moves into operational data, moves into, increase in the business overall. So I think I caught most of the important things. Did I miss anything, Ryan?
You nailed the big ones, and yeah, it was really good. The one part that I think you need to take a look at, and this is kind of future request, but it's helpful, is actually some of just the articles of incorporation, some of your personal income taxes if you're based on the company or structure. There's some basic things that help to have that may not be used. And I'll bring that usage in. The reason why we're doing collection up front is to really smooth the process overall. So not only does it help your advisor really put together the story, which is and have the foundational numbers, we're putting it together in a way that buyers can actually really understand it and quickly make a decision if they're going to move forward. And everything you just listed there, I thought was a fantastic job of the major categories. And then just some little minor things that we add over time. I don't think you have to gather the world on day one. And this is a critical, like one of the phrases that we often come back to is you have to run your business like it's a sale. And so if you're collecting everything and taking your eye off the ball, that causes you to have a bad quarter. That's about the worst thing you can do at that time. So making sure that you're separating enough time to focus on this process and relying on the expertise of your advisors, I think is critical to the survival of your company while you're going through such a important process. If I switch gears here a tiny bit, but it really goes into the next steps, Mike, there are three critical documents that we really rely on. One is a teaser. One is a confidential information memorandum. You'll hear that referred to as a SIM. And the third is a financial pack. I was just hoping that you can just tell us the role of each one of those documents, how they work together, and how that process work flows of getting the right document to the right person at the right time.
Yeah, for sure. Obviously, a teaser is exactly what it says it is. It's used usually with a code name for your company. It is used to market your firm to interested parties, but also can be used to do broad push marketing or It can be used in a variety of different ways to support an outreach function by an M&A advisor, both digital and physical outreach. And it's a way to gauge interest on behalf of a particular buyer. It can also attract buyers to you and to the opportunity pursuant to your go-to-market plan with your advisor. And certainly they can find us and you, and if we're representing you, through that teaser. And it gives them enough information to determine whether there's any strategic alignment there. And typical financial alignment, at least at a high level, based on, what's produced in the teaser. The SIM is a much, much more detailed version of that teaser, and it discloses who you are. And that happens after a non-disclosure agreement is signed with a particular suitor. And it gives them, hopefully, if it's well designed and put together, a very good understanding of the business, the opportunity, and an overview of the financials of the company over time. And it will gauge, buyers can gauge their level of interest to go to the next step, usually by reviewing that SIM. Typically there's an interaction with the M&A advisor or broker around the SIM and a queue of a quality set of quality questions that are discussed pursuant to that SIM. And then there's the data room, right? Financial packet. That's a much more detailed dive into your financials. It's typically in a data room that's gated. It is not generally released right away. It's released after further qualification of someone who's looked at a SIM, has expressed further interest and a need to look at your financials to formulate their thinking around creating an offer or submitting an indication of interest in a process. And so that, I think, is a much, much more detailed view of your numbers. Typically, it's blinded customer data. A lot of, obviously, sellers get concerned about publishing customer data within financials. So very common that those customer names are blinded in that, as are employee names in those data, in that data room and with those financial data. But it's enough information that if someone's looking to submit an offer or at least formulate an offer, that they should be able to get there with reviewing the data in the data room. Does that cover the watershed, Red?
Yeah, you really nailed the process. And just one comment on the teaser. Teaser is an interesting document. We're trying to gauge as much strategic interest, and we're trying to reach a wide base of people with that teaser. But it also has to keep you anonymous. And so there's this interesting balance between really being detailed in the market without just saying, hey, this is you out in the marketplace. And so if a teaser done right, it can really help accelerate the process and bring the right suitors in. And then that teaser can be the base foundational knowledge that's shared across other assets. So for example, an M&A advisor might use a landing page on their website to talk about your firm. Or it might be placed onto a marketplace, and the parts of that teaser start to become critical marketing assets. And so there's a lot of readiness that's happening in that first 30 days that's in a marketing stream if you're working with an advisor that's able to, A, produce the documents, and B, be able to know where to put them, and C, be able to have conversations from those documents. It's important to note that these are, we believe they're gating documents. A teaser leads to a conversation. That conversation leads to an NDA. That NDA typically leads to a confidential information memorandum release. And that SIM release leads into another conversation to understand and qualify and have detailed discussions. I will note that sometimes people just want the SIM. And we actually really solidly discourage that. If someone tells me SIM, please, just literally an email, SIM, please. I know that buyer already has just seen too many SIMs in their life, probably needs to take a step back. And we need to get them strategically aligned first. And that's why some of these gates are in place of a NDA, a SIM, and a financial packet released at the right time. The other thing to note is most of these are going to be standardized across buyers. So if you're running a process and you decide there's going to be an indication of interest date, having buyers at the table at the right time and at nearly the same time starts to be critical. So the release of a SIM can be timed a little bit more so everyone's on the same starting page. Or the release of a financial packet can be done in a way that gives people a fair shot at putting together the right indication of interest. All things to consider. And again, your M&A advisor is going to help you through that entire time. And then lastly, one of the things that I think we talk about a lot, and maybe we don't talk a lot about in this podcast, is in that first 30 days, there's a lot of understanding of your business. But one of the things that really shakes out as a CEO is you're really, what is your intention in the business? Like, are you selling in or selling out? And B, what are the deal terms that are acceptable? And Matt, I was hoping you could just detail a little bit on those two and why they're important in this process.
Well, yeah, and obviously most sellers come in, they feel like they've got an idea in mind in terms of why and what. And what I mean by that is why is now the time, and what is my plan, for after. And that the first piece is really, that's a personal deal, right? Working with an advisor early, I think helps in that, understanding generally if your number is met, if you sound like other sellers, that have ideas in terms of where they're going and what they're doing. The what is a little trickier, and what's next. Oftentimes, we'll see somebody come in, look, I've got other things to do. I may not be retiring, but I've got other ideas. I feel like maybe I'm a little tired. I've been doing this for a while. I've been doing this for 10 years or 20 years. And so I want as short a transition time as possible. I'm selling out. Well, early in the process and then throughout the process, sometimes those things that changes. And so one of our jobs in this early upfront is to kind of talk through a number of different scenarios, right? And allow our clients, the sellers, to really sort of internalize, how would that fit? What would that look like? Would that be good? For me as a CEO, and correspondingly, kind of, would it be good for my team? And then that helps to shape up sort of the different types of buyers and then the likely path that those buyers would lead to. And I think that, both of those are really important to spend enough time with early on, again, with this understanding that as the process goes along, there's freedom to change your mind, and that's okay. But it really does allow for us as the advisor to, be on good footing, with you as a seller, to understand what your goals and desires are, to understand where, what are some of the additional information that is going to be important for the seller to understand in making a good and informed decision. And, one that allows the seller to have enough, openness to be able to sort of create their path moving forward. And so it's sort of going in and understanding that there can be some variability, but the more that, you can be, open, with your advisor, and then also open to understanding that, maybe you don't have all the information. coming in and working with your advisor to get ideas in mind and a big deal is again, am I selling in? Am I selling out? And being able to see opportunities that can then, sort of firm up your path that's going to be right for the seller.
Yeah, it's something you want to think about throughout this whole process. And by the way, that you have the right to update and change your mind. And so sometimes when you meet the right buyer and things click, you may say, maybe I do want to sell in. So it's always an interesting process, and it's something emotionally people go through.
Yeah, Ryan, one of the things, and I wasn't going to necessarily, but I think it is worth going here, right, is a lot of founders, we work with a lot of private equity. And a lot of founders have this mentality in their mind of, oh, there's no way. Nope, I'm not going down that private equity path. Those guys are all sharks and so on and so forth. And, maybe it starts from like watching that old movie Wall Street and thinking Gordon Gekko and the like. Well, in reality, there's a lot of good private equity out there, and there's an opportunity for founders who maybe have that negative perception, but then going in and staying open. We've seen it a number of times with a number of our clients who kind of came in with that mindset of, no, I'm not signing up for that second bite at the apple. But after going through and kind of working through the process and having some of those meetings and understanding, the benefit if there's that right strategic fit and right cultural fit and trust being built, oftentimes we see a bit of a different change in mentality. But I think, Ryan, to your point, it's really about staying open and learning, and then the right fit's gonna come to bear.
You have to understand and trust the people you're going to work with, and this process is critical to make sure you have that right. Mike, I just have one last closing question for you. Again, two things. One thing we didn't talk about today, but does happen in that first 30 days is your advisor should really be looking for who are potential buyers of your business. And that is, I'll preview that. That's our next topic in this masterclass, is understanding what a buyer list looks like. And that's a concurrent with everything else in getting ready. That's yet one more work stream that's absolutely critical for success, is making sure we get the right buyers to the table. And that's what we'll talk about next time. Mike, if you were to give one piece of advice, or to have a CEO who listens to this, and what would you give, and what's one critical takeaway that you've got from this podcast?
Well, certainly, I think the key takeaway is that preparation equals leverage, or slow down to speed up your process. You lose leverage with a buyer the longer it takes for you to provide information or to come to a consensus in your organization or your thinking around specific input diligence questions. So being able to, let me explain a little more about that. If someone asks for a financial set of data that cuts a different way, or that you didn't provide in the data room, and it takes an inordinate amount of time to provide that because you haven't thought about it or haven't anticipated it, you lose leverage. If they ask for something simple, like, what's your ideal situation post-close? Like, what are you planning on? Are you wanting to be here for 5 years, or you want to have an early transition, or somewhere in the middle, and you don't have a clear answer because you haven't thought about that? That creates uncertainty in the buyer's mind. And ultimately, all of that will either impact value, the amount offered, or it will impact, and put any potential close with that buyer at risk. So being able to think about time, being able to think about these things more thoughtfully, follow the lead of your M&A advisor on the intake, be able to put together a fulsome set of documentation around, the teaser and the sim and the data room, and then being able to have clarity of thought about what is a good buyer profile? What is something where 1 + 1 = 3 together? How do you get excited about a deal with a particular suitor? Because remember that all deals have to line up strategically, culturally, and financially to fit. And so having some introspection about, your own sort of strategy and where you're trying to go and have clarity of thought around that, understand your culture and sort of your company's culture and how you've impacted culture and how you think about, working with other people and how you operate, sort of think of your operating system and how to be able to clearly articulate that. And then being able to have your financial house clearly in order in preparation before you begin a process are all super critical to your ability to, one, get a deal done quickly, but more importantly, to do it where, you can control the narrative and you can maximize your leverage to a successful outcome.
Yeah, Matt, Mike, this is a great podcast, a little longer than I thought, but I'm really glad it was because I think we've covered some areas that are going to help a lot of sellers in this market. I, again, really appreciate that. And Mike, Matt, I'll leave it to any closing thoughts you may have.
Well, I think it's that time, Mike. What do we do now?
Well, like we do at every podcast here at Revenue Rocket, we tie a ribbon on it when we're done, and that's exactly what we're doing today. So we wish you guys all a fantastic week, and hopefully you've enjoyed the masterclass so far, and encourage you to tune in on the next part in the series on sort of buyer profiling. And with that, make it a great week.